Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at RCAT Holdings.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
Okay, so RCAT. This is a really interesting one because the story isn't just about the company. It's about a fundamental shift in its whole industry.
Exactly. The company is completely changing. It's moving away from being sort of a niche, almost consumer-focused player.
Right.
To becoming a core strategic defense vendor for the U.S. government, specifically in unmanned systems.
And the thing that's really forcing that change is not their marketing plan, it's regulation.
It's all regulation. This is the first thing you absolutely have to understand. We're talking about the FCC's Section 1709 enforcement.
So what does that actually do, in simple terms?
It's a sledgehammer, really. It basically blocks foreign-made drones. Think of the big ones like DJI and Autel.
Ones that dominate the market.
Completely. It blocks them and their parts from being used by any U.S. government agency or in critical infrastructure. It didn't just hurt competitors, it created a protected playground for a very small number of domestic companies.
It's a government-built moat. They're not just competing, they're one of the only approved options.
And that approval has a name. It's the Blue UAS certification.
Okay, so Blue UAS, what is that?
Think of it as the Pentagon seal of approval. It means your systems are secure, they're cyber-trusted, and they're fully compliant with the National Defense Authorization Act, the NDAA.
And that NDAA compliance, that's the golden ticket, right?
It's everything. Without it, you can't even bid on the big contracts. With it, RCAT gets included in things like the $1 billion drone dominance program. It's privileged access.
Let's talk about the actual products then, because this isn't just a concept. What's the needle mover here?
The big one to watch is the Black Widow.
Okay.
It was chosen for the U.S. Army Short-Range Reconnaissance Program, the SRR program.
So that's the drone for the soldiers on the ground, the workhorse.
Exactly. Squad level, quick deployment, immediate intelligence. And that means volume. Lots of it. They're ramping up production on that right now.
And that's not the only one.
No, their flagship is the Teal-2. That's also Blue UAS approved, but it's more specialized. Think high-end, secure night vision, thermal ISR.
Got it. And I saw they're expanding beyond just aerial drones, too.
Yeah, they're moving into what they call a family of systems. They've got a new initiative, Blue Ops, that's building unmanned surface vessels, so boats.
Air, sea, and land. They're covering all the bases. So if that foundation is solid, how is it translating into actual sales? Because some of these numbers I saw were just wild.
This is the core of the bull case. The revenue inflection. I mean, look, their trailing 12-month revenue was about $7.4 million.
Okay, respectable.
But then their most recent quarter-over-quarter growth was plus 646%.
Wait, say that again? 646?
646. In their last quarter, Q3, they did about $9.65 million in revenue.
So they did more in one quarter than in the entire previous year.
That's the breakout. That's the regulatory advantage turning directly into cash. It's just a flood of pent-up demand from the DoD.
And management seems to think this is just the beginning.
They're guiding for the full fiscal year 2025 to be in the mid-$30 million range.
Yeah.
But the really big projection is for 2026. They think they can more than double it again.
So analysts are projecting something like a 90% compound annual growth rate.
Over 90% into 2026?
Yeah.
This is what you call a classic hockey stick moment.
And what's really interesting to me is that it's not just retail chasing this story. The big money is moving in. Institutional ownership is up to, what, 38%?
It is. And when you see that kind of inflow from extra-large investors, over 54% recently, that's sophisticated money making a big bet.
Right. I saw funds like Vanguard are boosting their stakes pretty significantly.
It's a huge vote of confidence, and it's why analysts are so positive. Price targets are clustering somewhere between, what, $12.50 and $15?
Which implies a lot of upside from here. But... and this is a big but.
Yeah.
It's all based on them pulling this off, which brings us to the risks.
The other side of the coin, yeah. The financial health. This is the primary risk, no question. The company is burning cash aggressively.
How bad is it?
They reported a trailing 12-month net loss of around $90 million.
Oh, wow. $90 million on just over $7 million in past revenue. So the question is this a strategic burn, or are they just, hemorrhaging money?
That is the critical question. Management frames it as intentional. They say that big loss last quarter was because they were investing so heavily in capacity.
Like what?
doubling their production space,
Yep.
pouring money into engineering for the Black Widow. They're trying to get ahead
Yeah.
of the massive DoD demand they see coming.
So it's investment-driven margin compression. They're taking the hit now to build the factory that can fulfill those huge Army orders later.
That's the argument. They are sacrificing profit today to grab market share tomorrow. The entire bear case hangs on whether they can execute on that plan.
And that execution risk is real. This stock is incredibly volatile. It had a 40% drop in 2025 before this recent run-up.
Absolutely. The pressure is immense.
Yeah.
They have to scale up manufacturing for the Black Widow, which is a huge challenge in itself.
While also managing the rest of their business.
And, most importantly, maintaining that perfect, gold standard cybersecurity compliance to keep their blue UAS status. One slip up there could be disastrous.
A delay, a manufacturing problem, anything could trigger a big sell-off, especially since so much future growth is already priced in.
So let's look at the price action itself. The stock has really ripped higher in early 2026.
Right, erasing a lot of those previous losses. And those big jumps seem tied directly to the news flow.
Exactly. The FCC news, a new DoD contract. We've seen the stock jump over 10% in a single day on announcements like that. The market is watching every move.
What about the options market? What's the sentiment there?
Very bullish, actually. Call option volume has been way above average, like 58% higher in recent sessions. It suggests traders are positioning for more upside.
Okay, so with all this anticipation, what's the next big event? The next real test for this whole story?
Is the next earnings report.
Yeah.
That's expected around mid-February 2026.
And what should people be looking for? Because it's probably not going to be a positive EPS number.
No, definitely not. Forget the EPS. The market knows they're investing.
Yeah.
You need to look at the backlog of orders, visibility into future orders, and most importantly, their updated guidance for fiscal year 2026.
So if they reaffirm that growth story, the stock could react well even with a loss.
That's the idea.
Yeah.
It's all about forward visibility right now.
We should probably mention the speculative stuff, too, that retail chatter about potential military action in Venezuela and the Black Widow.
Yeah, that stuff is out there, but you have to be careful. It's just rumor. It's not confirmed.
Right.
But it does highlight the kind of optionality that's built into a stock like this. Any geopolitical event that raises the need for secure tactical drones is a potential tailwind.
So to pull this all together, it feels like you've got this fascinating dual narrative.
You do.
On one hand, you have a powerful government-enforced regulatory moat and access to huge defense programs. That creates this incredible growth potential.
It makes it a high-conviction defense play.
Yeah.
But, and this is key, only if you have the appetite for risk.
Because of the cash burn and the volatility.
Exactly. But the fact that so many institutions are buying in suggests the smart money is willing to stomach that short-term pain. They're looking past it.
They're not buying the current balance sheet. They're buying the future operating leverage once all those fixed costs are covered by booming revenue.
Precisely. To really capture the value from the Army SRR program, you're probably looking at a 12 to 24-month hold. You have to give them time to scale up.
That's our look at RCAT Holdings. Remember to hit that subscribe button to keep up with our daily stock analysis.